Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone, give us a call, and we can help you answer your questions about mortgages, whether it be a forward mortgage, a reverse mortgage. And by the way, reverse mortgages, just as a heads up, there are new requirements for reverse mortgages, and the amount that you can actually get out of your house has been lowered. If you need advice on whether you need to get a reverse mortgage, whether you should get a reverse mortgage, obviously you can call us, 888-713-2929. Go to the website, malibufunding.net. We have a lot of different loan officers there who can help you with that decision. We have a great loan officer, Brent Gong, who works for us, and he's kind of an expert in the reverse mortgages field. So if you have questions about whether you can get a reverse mortgage, please give us a call. Find out before you make any decisions, simply because there have been changes made. Also, if you want to see this show, if you want to see our Las Vegas real estate show, go to YouTube. If you go to YouTube, our channel is Financing Mortgage. That's one word, Financing Mortgage. And of course, a number of the shows come right up. We talk about a lot of the same issues and things in the different places that we have the show, whether it be Las Vegas or in the Inland Empire. You know, a lot of the borrowers are very similar in terms of need, in terms of the type of housing. The only difference, of course, is in the IE. The prices are skyrocketing. Anybody out there who's looking for a house today can tell you exclusively, yes, it's too expensive here. And I'm one of these people that thinks unless we solve the housing crisis, which is really a lack of housing, whether it be new housing, existing housing, or any way that we can supplement the current rental market by allowing people to build more on their own property without having to go through the arduous process of both the permitting, the fees, the expense in construction. If they, can solve that issue of the rental on existing properties, we might be able to solve the overall housing housing problem. But let's face it, there is a shortage of new homes and there's a shortage of existing homes. And if you're out there, I absolutely feel for you. The problems are acute, and I don't know how or when we're going to fix it. If you're making more money, which most people are, in this economy in 2018, we've seen a huge rise in the stock market. I think it went up over 26,000 points. Think about this, 26,000. Daryl, can you remember when we were kids what the stock market was at?
It was below 1,000.
Oh, absolutely below 1,000. I remember when I was, 12, 13 years old, first time I ever really looked at the economy. Now, this is going back, how old were we? Are we?
Yeah, we're right in the same neighborhood.
Exactly. 67, I think. I was 12 years old. And so remembering that, and then it was 800, and today, and I'm 60, almost 63, it's 26,000.
You're an old guy.
Well, I'm just saying, who could have thought about that? And the Bitcoin issue, whereby some countries are outlawing it, some countries want to, I guess they want to heavily regulate it. There's a lot of things going on in the economy right now. So if you're working and you're looking around at disposable income to put into something like a Bitcoin, or you're looking for something to spend your money on, obviously you're doing well enough. Maybe you can afford the prices out there in the marketplace. I know there are many people who can't. So if you are some of those people, as I was saying, out in Las Vegas what about this family up in Paris? Did you see this?
Oh, the one with the 12 or 13 kids that were undernourished and...
Awful.
Yeah, there was a 29-year-old that was developed mentally, physically, and mentally like an 18-year-old or something?
A 10-year-old, they said. They said mentally he had not progressed past being a 10-year-old, being chained and housed in a deplorable and despicable and awful conditions. I mean, it's just, I can't even fathom that with your own kids.
How could that have gone unnoticed?
Well, that's the other thing, too. First of all, they were homeschooled, so there was no issue with the state or the local government in terms of approving whether they were in school or not. But if you're having kids and your neighbors don't see the kids except late at night, hustling them into some kind of van, or you just never see them shades drawn, wouldn't you at least ask a question or two?
You'd be curious. And the other thing is they said that several of them had to mow the lawn, but they had to do it late at night.
It's just bizarre, the whole thing.
Just plain old weird.
I'm just really upset by the whole thing when it comes to kids and they're being abused. I know that there was a thing in the news today about one of the gymnasts who was accosted and raped.
Several of them, all of them.
Yeah, they were all in court today because the guy was getting sentenced, or as part of the testimony for sentencing, the judge allowed anybody who was a victim to come in and talk directly to the court, and obviously having the guy who did all this right there with him. He used to be the doctor and then became the U.S. Olympic gymnastics doctor, I guess it was.
He was like a coach, and he said that the things he was doing to them physically was part of the training and
Right.
getting their hips aligned properly or whatever, and he was penetrating them.
It's just awful, awful. Just when people do things to kids, it is not it's way past criminal, and I don't know what you do about it or how to solve any issues like that. When we're in real estate and we're in obviously a sector which affects everybody, right? Everybody needs a place to live, and you got to go out there and find a place to live. Knowing the neighborhood, knowing what goes on, knowing the school system, knowing your neighbors, that's our job as realtors. And I take it personally that somebody, or like this guy, or somebody like this family, this mother and father, subjecting these kids to this, it hurts on so many levels. It's very hard to describe how angry I can get when people do things that really they should be strung up for.
And on the other side of the coin, when you're building new homes at this point, and you have to ask where the panic room is.
I
And they're
know.
building them into houses now.
It's funny. We had on, as you well know, we had Angel Naves on, about a year ago, and we talked about that after either San Bernardino or one of these horrific events, either the Nevada event. It's just in homes today. Are you suggesting, and he is a ex-Navy SEAL and a guy who's in the home security and business security sector, really knowledgeable person, and I asked him, I said, do you recommend homes having safe areas, safe rooms? And he said yes. Just because of that.
I mean, I know that I'm not prepared. If somebody came into your house in the middle of the night, would you know what to do exactly?
No, and I live in a rural community, and most of the people in rural America have their doors locked, but I would say a good 30 to 40% don't have them locked, even in cities. They just don't lock their doors. I don't know why.
I went with my grandmother to a family reunion back in Iowa several years ago. And first of all, I rented a car, and I pulled up in the main, area downtown, and I
Right.
automatically clicked and locked the car, and people just looked at me like I was a criminal.
Right, exactly.
Why is he locking the car? What's he got in that car that's so important that he's locking it?
It's really
And they said, well,
unbelievable.
why don't you meet at the house? And I said, well, where is it? And will somebody be there? Nobody will be there, but the doors are open. Just go right on and wait for us,
Well,
I mean,
I like the idea, but the reality is you
It's
don't
not
know.
good. Not good.
You don't know the neighbor next door, as evidenced by this family. And then previously, the guy up in New Hampshire, was it, that had his two kids or somebody in a cage for like forever,
Yeah.
like 11 years, 12 years, just horrible stuff. So as a realtor, as somebody who's out there lending money on homes in neighborhoods, in areas, obviously we have a stake in this. We need to set it right to get it right. I don't know if there's if you see it, tell it. Isn't that a strategy for terrorism?
well, even if you're wrong, what if you're right?
Well, that's the thing. And of course, you always get accused, and there's this big city versus small city thing versus, privacy and, public's need to know. All of this, yeah, I get it. But if you think somebody's in there, if you think there's something really wrong about the situation you're viewing, call somebody. Call the local police department, because normally the local police department wants to get on something as quickly as possible, whether it be the sheriff in rural areas or particularly in the San Bernardino Riverside cities, the police department. Anyway, I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone and give us a call. We talk about mortgages mainly on the show, but anything related to real estate, your community, what's going on out there that affects real estate, your decisions to buy and sell in this current market. We can be reached in many different ways. Certainly email info@malibufunding.net. You can go to the internet, www.malibufunding.net. That's our website. Got a lot of great agents there. We work with a lot of great agents. We work with a lot of great people. Our first guest on the show today is none other, and one of those terrific people on the show is Robert Perez. Robert, how are you?
I'm doing great, Jeff. Thanks a lot for having me on.
And thank you very much. Could you just tell me exactly the name of your company and a good way that someone might be able to get in touch with you right at the top of the segment so that people are aware who you are and where you are?
Fantastic. Yeah, so my name is Robert Perez. I work with Malibu Funding. I'm one of the reps there. And the best way to get a contact with me is my direct cell. That's 951 area code 538-4148. That's really the best way.
Okay, excellent. Now, I have a question right off the top. May throw you for a little curveball. You are a husband-wife team. I know that you work closely with your wife. How does that work out for you? Not a lot of people can't do that. How do you guys manage it? And I applaud you for doing so.
Fantastic. Well, one of the things that was when we first started in the business, she used to be my boss. And, now she says, used to be is not the right word.
That's great.
So we work together from day one. We're together 24 hours a day. The advantages of both of us being in the business is we both have, we both get to celebrate the wins and the losses sometimes.
Yep.
But, most of the time we're celebrating the wins. And because we're a two-man team, I'm able to be out on the field. I call it, the shaking hands, kissing the babies type of deal.
Sure.
And Antoinette is able to be behind the desk and slicing and dicing the numbers as I bring them in. So fortunately for us, we're able to put a lot of deals together and move them quickly up the pipeline because it's a two-man team.
Well, excellent. No, I appreciate that because there are a lot of teams that do the similar job. You obviously have, gotten jobs separated and you're able to work together like that. What do you think are the challenges that you guys are going to face in 2018 in the business, or do you think there are going to be any? Maybe there aren't.
Yeah, it just depends how we establish our goals. Before most of the people in our industry, they wait to the end of the year to put a plan of action together for the following year.
Right.
So we were able to put something like that together to make sure that we stay in front of the curve, you could say.
Right.
So as far as loans and the way real estate market's going to go, really nobody has a crystal ball for that. We can only assume in the direction it's going to go. So you just want to be able to keep up with your education. That's the key. Keep up with your education as far as lending goes, because it's always a good time to buy. When the banks are lending money, then it's always a good time to buy. And a lot of creative financing, I guess you could call it, are coming out of the shadows again. So
Yep.
That means that the banks are starting to loosen up. Sorry, I didn't mean to cut you off, Jeff.
No, not at all. Please, this is a conversation, and if I do cut you off, excuse me. I tend to do that a lot, especially when I want to get to the next point. But you make a terrific point in that, is that banks are starting to loosen up a little bit on their guidelines to lend, and some of the products that are available that weren't available a year or 2 years ago are making housing at least more affordable for more people who don't really fit inside that conventional box.
And it does, and that's true. It does help. And one of the things I'm excited about is the alternative to Los Angeles. A lot of first-time buyers, they are either, it's scary to tell somebody that's never purchased a home that your first purchase is going to be $500,000 or more.
Right.
Most people are not comfortable to hear those numbers, and especially the monthly payment. People are in fear.
Yeah.
But I'll tell you, the first house I ever bought, I was 25 years old. My payments were $1,700 a month, and I was scared. I was so scared. The house was $190,000. I was terrified. Mm-hmm. And I think it doesn't matter when you buy. My parents bought their first house for $60,000, and their payments were $500 a month, and they both had to work 2 jobs in order to make that payment. So as time goes on, we make more money, things cost more money. But I'm really excited about what Riverside County, San Bernardino County, and even Palmdale is LA County. Really, I'm really excited about Riverside, for example. I go out to the city of Banning a lot because
Yep.
my parents live there, so I visit them. My dad's in his early 80s, my mom's in her late 70s, so I go out there at least 2 to 3 times a month. And I've watched the city grow in the last 12, 13 years, and there's a lot of opportunities there. So I think Riverside County is a great example or a great alternative for LA County. And it's really not that far of a drive. Cars are lasting a lot longer now, so driving 100 miles
Let me ask you a
in
question.
1 day is really not that bad anymore.
Some of the prices out there, you're mentioning that it's more affordable. Give us an idea, give the audience an idea, because as you know, this particular show is broadcast all over the Inland Empire. And so if you're talking about prices that are affordable, give us an idea of what they might be out in Banning.
Well, that's great because we have a whole realm of them right now. For example, we have a property in a 55 and over community that we're working on, and the values there go about 150 to 185. 2 bedrooms, 2 to 3 bedrooms, 2 bath, maybe a 2 bedroom, 1 bath type of deal, and those will go for about 140. And the payments on something like that is $700, $750, or let's say even $800 with your minimal down payment. Then you have some other transactions that you're almost $300,000, but they're brand new construction. You're coming in with a little bit more money if you sold a house in LA and going out there. But let's say you don't, and you come in with little down payment. Your payments are going to be right around $2,000 a month, depending on what your credit looks like and what your down payment is.
Right.
But for the most part, I mean, that's exciting when you can get a brand new property and pay about $2,000 a month.
So these are new houses.
These are new, there's new houses.
Oh, yeah, that's
and
nice.
More construction coming up. Like when I
Right.
drive out there and I see the big bulldozers starting to level. But
We're losing you a little bit, Robert. I don't know if you can hear me. Maybe move back to wherever you were or whatever is going. This has been Robert Perez talking to us about properties out in Banning, talking to us about the new construction, about what's happening in the building in that area. I think we might have lost him, but
I'm here.
Oh, okay.
Sorry about that.
No, that's
I'm here.
okay. I'm very happy you saved me there. That's great.
Sorry about that.
No, go ahead.
Yeah, and I apologize for my connection. I normally it's ready, but today my phone must have known that I was going to be on the radio. So
No, it's excellent actually, because the affordability of housing is really at the crux of everything we're doing here in the Southland, Southern California. If we can't get affordable housing to people, how the heck are we ever going to be able to solve homelessness or employment or anything else? The number one basic need is housing, and if someone can't afford it, what do they do next? So this information is terrific information, and you say there's more housing coming out in that general area.
I think there's more housing. Well, I see when I drive out there, I see the big bulldozers. They're leveling the ground, so I know there's more houses there.
Right.
One of the other things that we're excited about also is if you already own a house in Los Angeles and I'll just give you an example of some of the things that we use in our office.
Okay.
We tell people, if you're making $60,000 a year or a little bit over $60,000 a year and you got $10,000 in your pocket, let's talk, because you can definitely try to get some units. For example, I like apartments anywhere from 1 duplex or 4 units. You can come in with minimal down payment of 3.5%.
Right,
You
because
can
it's
use-
an
you can use the
FHA.
same
Mhm.
financing to buy apartments, and then the apartments can actually pay off your loan. You can live in one, rent out the other 3, and you possibly could be living for free. And when you get into your 80s, like my parents,
Right.
then the apartments are paid off, and that's it. It's easy money, you could say.
Oh, excellent. Hey, listen, I really appreciate you. Just one last thing before you go. You had kids. A lot of people have kids. The kids that leave for empty nesters, what are you saying to people who have had kids, they've left home, and they possibly are looking to sell their property? You think this is a good time to maybe get into the market if you're looking to downsize a little?
To downsize is fantastic.
Right.
Because when you're downsizing, it just means that somebody's upsizing. There are people that are having kids and they need bigger homes. So you're able to take advantage of the situation and take advantage of the market, for example. The market is still strong. Interest rates are still low. So there's a lot of buyers out there. And if you're looking to downsize, again, in the city of Banning, there's a place called Sun Lakes. And it's like heaven for 55 and over. It's behind the gates, you could say, and everybody's driving around in their golf carts. And it's still $250,000 for your 3-bedroom, 2-bath house. It's amazing.
Hey, Robert, thank you very much. We're up against the clock a little bit. I really appreciate you coming on and explaining to us some of the housing issues that are being solved out in that area. At least that it sounds like there's some out there. And if you could shout out your phone number one more time.
Sure. Phone number is 951 area code 538-4148. That's my direct cell. That's the best way to reach me. You can also reach me on my personal email, r.perezloans@gmail.com.
Thank you very much. I really appreciate you
Jeff.
coming on. Okay, bye-bye. And
All right, talk to you.
this is Jeff Barton, and I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We talk mortgages. A lot of purchase this winter and certainly into the spring. But I've also seen a great uptick in refinances. They went up 6% last week nationally, which tells you that people are finally waking up to the fact that rates, yes, are going up. So if you're one of these people and you want to get a chance to talk to us, pick up the phone. You can also email us, info@malibufunding.net, and you can see us on YouTube, on Facebook. We've got a Twitter handle. I've got, any other way, Sanskrit, smoke screens, whatever you need for me to get in touch with you, I can, but I can't help you unless you give us a call. And if we can't help you, we're going to point you in the direction of somebody that can. A person who comes to the show on a semi-regular basis is one of these people. It's Brenda Scott, who is a loan officer, MLO for Malibu Funding. Brenda, how are you?
I'm good. How you doing?
I am terrific. Thank you very much, and thanks for allowing us to talk to you again early in 2018. Give us your assessment of 2017 and what you're looking forward to in the first few months of this year.
Well, I tell you, you kind of took my thunder away when you said purchases are up. They are up, but the areas that I'm targeting right now, they're not doing very well because the loan limits have not reached the capacity where people have all this equity in their homes, and now we can't take this equity out.
What are you suggesting to people who have this issue? Are you finding lender solutions for them?
Well, the last couple of days, I've been making some phone calls, and I'm realizing now a lot of the lenders, they don't advertise it as much, but they will now, is that they have non-Freddie and Freddie Mac loans that are out there, but at the time we didn't need them, so now we need them. So now they're bringing them out again. The interest rates are a little bit higher.
Yep.
The cost is a lot higher, but I can get the loan done.
Right, and we're talking about equity in the house and being able to access that either to use it for, an emergency, a medical, college, or even to invest in a property, right?
Absolutely, absolutely. I just had a purchase in that Chino area, and it was a nightmare because the loan changed, so they end up having to, come up with more money than they wanted to, but they were able to get in the house, and we definitely was able to get them a loan.
Well, that's a good news. Obviously, the borrowers are going to have to be a little bit more educated. I guess that's part of what we do on the show, is to let them know that, yes, there are non-QM loans, there are non-FHA, non-Freddie, and non-Fannie loans out there, but yes, it costs you more. There are some solutions, and I did hear somehow that they were going to allow a certain, maybe not a loan limit increase, but that for instance, if a lender did a Freddie or a Fannie loan and then kept the loan on their books, i.e. they serviced the loan and kept the loan themselves, they would then be allowed to insure the loan through Freddie and Fannie, even though they haven't sold the loan to them. Have you heard that too?
That's correct. I got that yesterday as well.
Right, exactly.
Absolutely.
So that means simply that the rates shouldn't be much higher than they are currently, which, in fact, they are rising. What are you seeing as rates today?
Oh, yeah, they're rising. I mean, even on these non-Q loans, I mean, you got interest rates, starting at from 5 to 5.25, and I know that may sound like, oh, my God, that's so much, but it's really not a bad transaction when
Nope.
you're getting what you want, you know what I mean? And you're getting what you need.
Well, are you also suggesting to people that, to look at a 15-year, because the rates will be lower even though the payments will be higher?
I have. I thought of it yesterday, but didn't get a chance. But yeah, the 15 and the 20, their rates are a lot less than that 30-year, especially on that non-Q. And another thing that these lenders are pushing, they're pushing these 5-1 and these 10-1s, and these loans have excellent rates, and the cost is a lot less.
Yeah, I like the short-term loan if you know what you're going to do. Obviously, if you're getting in a 10-1 ARM, you're either looking to sell the house within a certain, like let's say you're an empty nester in 5 or 6 years, and after that you probably want to sell the house or downsize. Yeah, that 10-1 refi is probably a great idea, right?
Yeah, I push for the 10-1. I mean, I know it's only 3 years difference, but if a client is not feeling that comfortable with the 7, we can, kind of negotiate that 10-1, but the difference in the pricing changed from the 7-1 to the 10-1. So I think that's a good option. I think in between, 5 years, anyway, the clients refinance. So either they're going to refinance in 5 years or they're going to sell in 5 years.
Yeah.
It's a good deal.
Yeah, I think anybody who has a real clear mind of what they're going to do, has a plan in place, somebody who's approaching retirement, or somebody who knows that every 3 or 4 years they're moving because their job demands it. These are the type of people that can really take advantage of these ARMs.
Absolutely, and it's good for a purchase because you qualify on that, on that low rate. It's good for a purchase.
Yeah, I agree, 100%. Oh, okay, so we've taken care of a little bit of the rates. I think we're going to see, obviously, the Fed funds rate go up by a quarter point every, maybe 3-4 times this year.
Yeah, I think so.
Yeah, and I think the overall economy is heating up, so we're going to see inflation, which means that we're probably going to see a rate hike for mortgages as well. What are you thinking?
I absolutely agree.
Right.
You can see the rates are easing up a little by little.
Yep.
So, yeah, interest rates are going to go up. But, again, a 4.25% or 5% rate is still not a bad rate.
No, I agree. I have as a matter of fact, I'm making my last payment next month on a house, and I had a 15-year mortgage, and I didn't touch it, obviously, for that length of time, and it was a 5.1% fixed rate. So I had no issues. I mean, if people are saying, 5%, well, I've had that. I mean, I only paid, a couple $1,000s a month for my house for 15 years, and it's paid off. So I'm very happy.
Oh, yeah, I think it's worth it. It's worth it. It's worth it.
Yeah, it was a $400,000 mortgage at the time when we got them. When we got it, we had paid down a little bit. They did a refi because the initial rate was 8.75%. Brought it down to a 15-year at obviously 5.1%, and yeah, paying it off after 15 years, making that kind of payment. Yeah, that was a good deal for us. And now that the house is paid off, all the kids just left to go to college. My last one this year, so we were able to really take advantage of a lot of things concurrently. Since college is extremely expensive, we might be able to take some money out of the house, and take advantage of the new low rates. But we didn't touch it for a long time. Glad we didn't.
I'm glad you didn't, because you're going to need it to send a kid to college.
Yeah, I know, and you have the same concerns, right? I mean, you're dealing with the same expenses.
I'm dealing with the same one. I have a rental, and it's for my kids to go to college. I got to get an adjustable rate because it's keeping me afloat, and I'm just hoping and praying that he's on track, and when he gets ready to go to college, that's his college fund.
Right. Exactly right. I mean, when we talk about equity in a house, we're really talking about, okay, what are you going to do with that equity? Obviously, if you have equity in the stock market, you have equity in your house, there's an issue of, okay, it's great on paper, but what can you use it for? What's your utility of that money? And for you, it's college tuition. For a lot of people, it's medical. For, retirement. I mean, there's so many needs. Right.
Yeah, I wouldn't leave that equity in, though. I would do whatever I could to maximize the equity out of that property, because we're in California. These properties they can change any minute now.
Right, they can. Hey, Brenda, could you shout out your phone number for people if they want to get in touch with you and need a good loan officer?
Me. Yes, please call me 562-500-2400.
Brenda, thank you very much. This has been Brenda Scott from Malibu Funding, mortgage loan officer, on the show with us. Brenda, thanks a lot.
All right. God bless you guys.
Okay,
Bye-bye.
and you too. We'll talk soon. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone, give us a call, and we talk about mortgages and real estate, purchases and refinances, development, building, all kinds of things on the show today. We talked about some great development going on up in, where was it, Hemet, or where was it, Daryl? Was
Banning.
It was up in Banning, right? All the great stuff going on up there. Obviously, for people in San Bernardino and Riverside are listening to the show, that is a terrific opportunity. We also wanted to talk to another guy, person who has recently come into my life. Really grateful that he has. He talks about some development opportunities in another part of Southern California, but getting him on to talk perspective and what's going on in real estate, I want to say hello to Paul Valles from Poly Properties. Paul, how are you?
I'm great. How are you doing?
I'm very good. Did I mess that up? I pronounced everything right?
Yo, you did terrific.
All right. Thank you very much. Paul and I are trying to get some business going together, and I really appreciate him coming on the show. Paul, could you just describe exactly what it is that you're doing and how it is that you're trying to obviously bring expansive real estate properties to the market?
Sure. Well, right now I'm in major development in the San Fernando Valley. I'm building apartment buildings. Of course, I started off as in the mortgage industry and went off to sell regular single-family residences. Of course, we got hit with a little downfall and dabbled with a little short sales, and now the development just seems to be prosperous again. So that's where I'm at now.
Okay, tell me something about development itself. I know a lot of people hear that. They fear for their neighborhoods. They grab their children. They hide under the couch. Development itself is not foreign to you. Explain a bit about it, but about the process, about what you're really trying to accomplish when you're trying to develop properties from existing single-family homes.
It's funny that you say that. I'm glad you asked that because I've been on both sides of the fence. Growing up as a young kid, riding bikes, and here comes a big developer knocking everything down and building all these crazy things. And now I'm on this side of the fence building, and I know there's a housing shortage.
Yep.
So I know that when you go into a community, the first thing you do is fear, like, what are they going to do here? But once you're done with the project, everybody sees how beautiful it is and how wonderful it is for the neighborhood, and it really brings up the value. So people tend to kind of not look on the tail end of it, just the beginning process. And it is dusty, dirty, whatnot, but when it's all done, it really benefits everybody, especially now with the housing shortage.
Yes, I think solving the housing crisis is going to take everybody to look beyond what their own selfish interests are, because let's face it, every time there's a new bond measure or a new tax to try to help the homeless, what we're really talking about here is the lack of housing in a given area. So therefore, people are either forced into the street because there is no housing, or they're priced out of the market, and so they're also forced to go onto the street.
Right, and there's so many little departments that affect the housing itself.
Yep.
As a developer, when I go in and pay for permits or whatnot, I'm being nailed with so many different fees and guidelines, and by the time you get done building, you have to set the rent at a certain level or you're broke.
Right.
Of course, that affects the general renters. Like, you're raising your prices way too high. Then you have density bonuses. You donate a couple of low-income units to build more. So there's like a teeter-totter effect, the tug-of-war of developers and the city and, environmental different groups out there. So there's really a wide variety of issues, or not, I shouldn't say issues, just challenges, I should say.
No, I think there is. And I think when you're a developer, some of the things that you're trying to help and solve, obviously you have to make money in order to make it all work. But the ability of you to come in and do large-scale projects in a neighborhood which needs it is something that people have to look past their own selfish interests. I had some reasonable development in my history, not a lot, but some. So I understood what you were saying about government interference and everybody dipping their toe in and trying to tell you what to do. That's got to be frustrating.
It's very frustrating. And even like right now, I'm building, I'm required to have certain inspections, and you have to pay for these inspections, and they're not cheap. And when they come out, they just look and sign a paper and walk away, and that's $500.
Yep.
So it's kind of ridiculous in some aspects, but there are some really good inspectors out there, and that's where you harness those guys. You really want a building that's built well. But, I take a little bit of pride in what I build. I design it myself. I want to make sure that when people move in, they're happy. We have rooftop lounges that have views. We have gyms and racquetball. I also pay for feng shui. I like people to feel good.
Right.
Now, the street I'm developing on, it's really run down. It hasn't been developed for decades. And I talked to some of the renters here, and half of them qualified to buy houses. They're just not familiar with some of the mortgage products out there. And I put a sign out in front of my building. I'm only on the framing stage now, and now I have a waiting list. People can't find housing. So
Right.
there's so many different things that are going on in the community. Overall, I think it's a positive thing to develop and redevelop.
Now, you do something interesting as well. You kind of go into the neighborhoods prior to even attempting a development. You go, you talk to the neighbors, you try to get some input from the surrounding neighbors, maybe giving them an option to sell their house to you. Do you find that obviously that is a easier way to go for you, or is this just something that's evolved over time?
Well, I get to know the neighborhood, I get to know the people, and I do that for a special reason. Sometimes I need help from the city council, and when I have a number of local residents on my side, I usually have a little bit more power to do things, such as the street I'm building on. We need to make it wider. We need to provide more parking. There's no parking on the street, and there's only parking on one side, and it's filled with apartments and multifamily and duplex and triplex. And some of especially the mothers here, they work late.
Right.
They have to park down the street and walk in a dark neighborhood. So when you get a petition signed with all the local residents, it really helps when you're dealing with city council and the development in an area. And everybody agrees. You look at the positives, and you can make things happen, but there's always roadblocks, whether it's Caltrans or the city of LA. But the people themselves can be strong enough to make change happen. And it's always for the better, especially how you present it.
Yeah, I think so too. I think the idea of working together, I wish in the mortgage industry we had more of that. I think what happens with regulators is that they become cops on the beat rather than trying to work out problems with both lenders and people who need loans. And so what happens then is it becomes a very adversarial relationship between regulators and lenders, and really who bears the cost and the delays are obviously the consumer.
Right.
So, go ahead.
I know right now with the mortgage industry, I see it coming back, that there's a lot more flexibility for qualifying. So there's a lot of clients I had left over from my business. They're still calling me, even though I'm no longer in the mortgage business. And I'm referring them out to reputable loan officers or whatnot.
Mm-hmm.
But they're surprised what they can do now. They're still stuck after 2008 when everything crashed. There was nothing available. Now I see a lot of flexibility coming back, so everybody's excited, actually.
So in the last question before we go, in the development area, do you think that this is a one and done, or is this sort of a model that you're trying to bring to a lot of different areas in the valley?
I'm glad you asked that, too. This is actually one of my first apartment buildings I've ever built. I usually build a lot of single-family residences, usually all over Sherman Oaks, up in the hills. This is a 22-unit apartment building. It's one of my first ones underground parking. So, yeah, it's actually my model of how it turns out, the cost factors, and how people like it. And I'm going to take the same plan and start building them all over, the local area here, especially the excitement. Some of the people that walk up and down the street, I talk to them, they look at the building, they see the renderings because they have a sign out front now.
Right.
They're very excited, so it makes me excited, and I just want to keep doing it.
Thank you very much. Hey, Paul, do you want to shout out your phone number in case someone has a question about your unit or maybe future development?
Yeah, absolutely. It's, area code 818-632-3036. If you're interested in moving into the apartment or have general questions about construction and development in the area, I'll be more more than happy to share that with you.
Paul, thank you very much. This is Paul Valles from Poly Properties on the show with us talking about development. Thanks very much, Paul.
You got it. Have a good day.
And you too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. Pick up the phone and give us a call. We will be here answering questions about mortgages, mostly about mortgages and real estate. We do talk about the cities and the towns in which we do try to serve. Certainly, we want to thank everybody at KCAA, KMET, and the Roadrunner for airing our particular views and what we're talking about on the air each and every week. We have a terrific following. We're getting about 2,000 downloads of the show on a podcast each and every week, not to mention the great people who do listen to the show. Fred and Bill, great job out there helping us to establish what has become a pretty good show on Saturday and Sunday afternoon. And again, I really appreciate people who listen to the show, because without you, it doesn't work. I'm Jeff Barton. If you'd like to see us, you can see us on YouTube. Go to Financing Mortgage. That's our channel. If you want to see us on Facebook, you can go to Facebook, type in Home Loans, Malibu Funding Inc., and we pop right up. Certainly, I have a blog. My Twitter handle is at Jeff6493, and our website, the website for Malibu Funding Inc., the sponsor of the show, that's an NMLS number of 79620, is www.malibufunding.net. Now, that's a lot of information that I've just thrown out there, and like you, if you're hearing it, you catch a little bit of it, and you listen each and every week, one day you'll remember exactly what's being said, and you'll pick up the phone, or especially if you have a mortgage question. We talked in the first segment a little bit about some of the issues happening in and around our area, and to us as a whole, as a community, whether it be in some of the issues surrounding this horrible person who did horrible things to the gymnast, or whether it be the family who has had the 13 kids. We wanted to get into that just a tiny bit before, because the neighborhoods that we all live in are very important, right? Because we live there, we work there, we raise our children there. And real estate, if nothing else, is about establishing community. That's what brings value to what we do. Certainly, there's square footage cost, there's replacement cost, there's paint and new roof, but the reality of where you want to live is based on a community of people that want to maintain standards, and those standards within those communities are what we call value. The value is what we set prices in real estate on. Certainly, if you have the best house in the best neighborhood, it's probably going to cost the most. And what do we mean by that? Well, we mean the schools. We mean the crime rate is probably low. We mean that the fixtures and the plumbing and the city infrastructure is probably the best. If we're talking about issues other than the house itself, this brings added value to the house. And everybody out there who wants to get into a situation like this where they're thinking, my gosh, my kids are going to the best school, or my kids are going to have opportunity because the crowd that goes to this school seems to be from an upper economic strata. This is all really important. And so when we talk issues, when we talk about things like safety and awareness and making sure that what's going on in your community is your responsibility to deal with, that's what we're talking about. We all have a responsibility to our communities in terms of what goes on there. So pay attention. Obviously, I try to do the same thing in mine. I remember one time we were traveling, and not a short distance from the house, probably 10 miles down a road, and it was after a rain, and we've had some horrible rain incidents, right? The 101 up in Ventura County is still closed to this day, and they're still trying to dig out from 8 feet of mud from the mudslides after the rains, of course, after the fires. Driving down the road that particular day, a rock had just landed in the road, and the car in front of us slammed into it and incapacitated the driver. So I jump out of the car, and my wife says, "Where are you going?" And I said, "I got to get involved." And this is the kind of community involvement that everybody has to get involved with. And I've been in situations all over the Southland, certainly in Los Angeles County, if not out in Riverside, and also going out to the desert when I do the Las Vegas Real Estate Show. People are willing to jump in and help as long as they feel safe about doing so. I wouldn't recommend it to everybody because there are more vulnerable people out there than not. However, if you see something and something's going on and you're not quite sure what it is, just pick up the phone, dial 911. Or if you think you can get out and help somebody, especially in a situation like I was, hey, this person was unconscious. Got him out of the car. I happened to have a first aid kit. We, got him bandaged up a little until the ambulance came. Yeah, you just try to get involved. It's so much of what we try to do is be community, and that in and of itself is what real estate is all about. Okay, I wanted to get to a couple of things here in the news to you section. I want to talk about mortgage rates. Mortgage rates are inching up. Why are they inching up? Is because we're looking at some heated inflation numbers in the last 60 days. Inflation is the driver of interest rates in the U.S. If we have inflation, the yields on the bonds have to go up, which means that the amount of money that the government pays also has to go up in order to be able to have people buy bonds. That in turn causes inflation. Inflation being that costs of things go up. If that happens, you're going to see mortgage rate goes up because mortgage rates in and of themselves are tied to the 10-year bond. So if that's confusing, don't let it be. I'm just going to quote you what the rates are right now today compared to a year ago. 30-year fixed, 4.125% to 4.25%. Year ago, it was 3.99%. So it's not a lot, but it's creeping. So if at the end of the year we're at 5.5%, 5 to 5.5%, still low, but not historically low. When we were looking at interest rates, a year to 18 months ago, even 2 years ago, being in the twos, well, that's quite a bit. If you're considering it's $100 per $100,000 on a $100,000 loan, you're going to pay another $100 every interest rate point that gets hiked. So if you go from 4 to 5%, that's another $100 every $100,000. And in as much as it doesn't seem like a lot until you start seeing the prices of real estate at $400,000, $500,000, $600,000. Now you're talking, if it went up a point and a half in 2 years, and you want to get a mortgage in 2 years rather than now. This also explains why what we have now is a spike in mortgage refinances, and the applications for mortgage refinances have really shot up 6% last week. Why? Because everybody sees the writing on the wall. Interest rates are going up, so don't. I mean, we've been saying it. So if you're sick of me saying it, don't listen to me. Just pick up the paper, go online, go to mortgagenews.com, and you'll see mortgage interest rates are going up because of all of these explanations that I've been giving you. The FHA VA is 3.75%, was 3.25% a year ago. 15-year fixed is still pretty good, but that means your payment's going to go up because it's 15 years, 3.375 to 3.5%, and the 5-year ARM's still in the low twos, but again, that's an adjustable rate. If you're one of those people that knows exactly what's going to happen in 5 years, i.e. you're either going to sell your house or you're going to move or you're going to rent it out, it may be a terrific choice for you to get into the 5-1 ARM. Let's see. FHA approvals in reach for more buyers. Some of the things that we talk about with the FHA product. FHA allows people to get into a home without spending a lot of money, meaning that if you have 3.5% down of a purchase, if it's a $100,000 purchase, that means you have $3,500 down as opposed to the traditional 20% in order to get rid of mortgage insurance or mortgage insurance premiums. So if you're spending $3,500 on a $100,000 condo or a house or wherever it is that you live and you want to get a loan, FHA is the way to go. FHA rates are usually lower, although there are some additional costs to it, as we've explained on the show many times. There's an upfront fee, and there's mortgage insurance along with that product. And once you want to get rid of that mortgage insurance, you need to have at least 20% into the property. We are in dubious times. Why do I say that? Because if we've got rising interest rates and you're in an FHA loan, you may in 2, 3, 4 years be able to have 20% because the price of the house keeps rising. However, the interest rates are also rising. So your payments, based on what it is today at whatever the rate is for FHA, 3.25% to 3.5%, in 2 or 3 years, if it's 5.5%, 6%, you may want to still stay in your FHA loan because the payment's going to be lower, just simply because the interest rates have risen so much that the interest rate that you're going to pay on a conventional 30-year fixed loan is is going to be actually higher than if you just stayed in your mortgage insurance premium loan. And the benefit of that, if in fact that happens in a couple, 3 years, which I think it will be that you're still insured. So those things are terrific and really good. There's a lot of things with the FHA loan that I like. I like to bring, we're going to bring on a couple of 2-3 guests on the show, and I guess we'll thank them now. Robert Perez being on, Brenda Scott, and Paul Valles. And he's an interesting guy because he talks a lot about development and how he's going about that end of the business. As we talked earlier in the show about housing and how we're going to solve the housing crisis. And what is the housing crisis? People can't buy a reasonably priced home here in Southern California. Inland Empire, Los Angeles, Orange County, Inyo County, up in Santa Barbara, just horrible. Anyway, I'm Jeff Barton, your voice in the mortgage industry, and thanks for being with us, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.